It looks like we're having issues with regional banks again. New York Community Bank plunged 25% today and is now down 60% year to date since January 1st of this year. This goes to show you that the regional banking fears that we had a year ago may not necessarily be over. New York Community Bank acquired Signature Bank last year, and New York Community Bank, not all assets that New York Community Bank has are FDIC insured, and the stock was down a lot today. This gives some worries about regional banks, and it's kind of a tale of two markets because first, New York Community Bank had a fourth quarter loss, so that didn't necessarily help the situation. But then it's a tale of two markets because Palantir surged 30% today because they were granted a $650 million contract from the government, combined with beating on their earnings reports and issuing strong guidance due to all the AI demand that Palantir is seeing. And I'm a proud Palantir shareholder. I'm up now about 250% on the stock. This goes to show you that there's a difference in the markets. Tech is doing really well and is dominating, especially because of AI fears, but there's underlying weakness, especially in regional banks. So this is something I think, in my opinion, that the Federal Reserve should keep an eye on, and why I think, in my opinion at least, the Fed should probably cut rates in the March meeting, although they kind of admitted that that's looking unlikely at this point. Jerome Powell said that in both the press conference and the 60 Minutes interview. But I personally think they should cut rates by 25 basis points in March to be proactive against more regional banking fears, especially the Bank Term Funding Program is going to expire soon. But either way, if they don't cut in March, hopefully they will cut in May or June. Obviously, we'll have to see. My new prediction for the markets for this year, at first I said I thought that the first half would be choppy and the second half would be very strong in the markets. Although that's possible, I'm starting to think now that the first half might be very strong and the markets might continue going up until around June, when there's more anxiety about rate cuts again. And especially if the economic data proves stronger and it looks less likely that the Fed will need to cut, that might cause the markets to decline a little bit, because the markets and investors are looking for a rate cut at least around the middle of this year in late Q2, early Q3. So if that doesn't happen, that'll likely lead to a sell-off, in my opinion, in the early second half. And then with the elections, I think there'll be a little bit of a sell-off leading up to the elections because of the uncertainty. Yes, we'll probably still have a Santa Claus rally in November and December, in my opinion, but I think that the beginning to middle of the second half will be a little bit choppy. In the meantime, though, I think the first half of the markets will be strong. But as I said before, once there's a little bit more anxiety, if the Fed doesn't cut rates as early as expected, now they pushed it back to May, June, and especially if that doesn't happen, that'll likely cause a decline in the markets, in my opinion. And personally, I think that the Fed probably should cut rates in March to get ahead of any possible regional banking issues.